So today was quite the bullish one. If you're any follower of the market, you could see that today Bitcoin hit a high of like 20,000. The Nasdaq hit a high, the SPY hit a high, the Dow hit a high. It's something good to note because for the first time in a long while, good news, which was the CPI news we had yesterday, actually turned out to be good news. So the market had a good reaction based off some good numbers. And then also, I was able to play this using the same strategy, the dollar as the trend indicator. However, I could have held this trade a bit longer. As you can see, well, I'll show you, the trade actually hit a daily resistance level of mine, and also it almost hit a weekly resistance level of mine. These are two levels that I could have taken profits at. So we'll work on fine tuning the strategy because sometimes we don't have that much momentum for it to hit those levels. So that's why I tend to take profits before it hit those levels, like lock in some profits at a 1 to 1.5 risk reward, something like that. So I'll just show you how we traded it off today. I could have held the trade a bit longer. I didn't. I'm still happy with the trade. However, just looking back, I could have made a little bit more profits. But let's get into it. Right? So I only did one trade today. So I hit it from the buy side and closed within an hour and 5 minutes. So the buy side I opened at 9:30 exactly. So at 9:30 exactly, let's go to the 9:30 candle, and this is the QQQ on the 5 minute. So I'm on the 1 hour chart when I'm placing the trade, but I'm looking at the 5 minute for the dollar because it shows a bit more to it than you think, and I'll just get into that a bit. So let's show my exact entry, and as you can see here, 276.51 at 9:30. So let's go to the 9:30 candle. 276.51, is that like the bottom right here? Yeah, so that's right at the bottom, right at the open of this candle. So I entered exactly market open to the buy side, and I held this trade for an hour and 5 minutes, and I closed the trade when it hit 27837, and I'm okay with that. I could have made a little bit more profit, but I'm okay with locking in some profits because if this was a bigger trade, I could have just locked in, say, a 350 profit or a $3,500 profit within an hour. So just getting the consistency on the strategy is where I'm gonna be able to just kind of a- allocate more capital to the strategy and make some consistent profits, right? So I sold this at 27837, and let's look for that 1035 candle. So 1035, 1035. So it's around a kind of high of the day. So 1035 candle, 27835. So it's not the highest, but it's higher than the entry. 27835. 27835. So right around here, right there. Okay, so I entered the trade here, market open, closed it when the market kind of had a little reversal. From there it kind of went up, came back down a little bit more, and then began to rally up again. Sometimes the market can really reverse against you, and you don't want to hold through this because you had your chance to take profits right here. You were greedy, you wanted it to ride up a little bit more. The market started going against you. You didn't take out profits, and then you're right back to break even. So that's something that is not the best practice, to let the trade go back against you and not lock in some profits. That's from my perspective, at least. So that was the only trade I did. The week we had one loss for the week, and the 4 other days were winning days, profitable days. So I call this week a good week. So we're just looking at where I entered here, and then I exited here at 10:30. So if we also look at the dollar, and I can show you why I entered as well. So look at the dollar. I have the dollar on the 5-minute chart, right? And then I drew my daily resistance level, and then what I could see right before market open was that the dollar was kind of rejecting off that level. When I saw the dollar rejecting from that level, I was like, okay, I'm gonna enter to the buy side and set my stop loss like at, I think I went to 5.65 was my stop loss. So I basically was risking $20, and that was the max. So I basically was risking one to make two, but I only exited at a 1.5 reward. So I risked 20. I was aiming for like 40 or 60 or 80. However, I just exited when it hit like 37 thereabout, and I was okay with that. But basically, why I entered the trade was you could see the dollar breaking down here, and also kind of it broke below the daily support level, and then that support became resistance. And as you can see, all of these candles, they had difficulty breaking back above this daily line, this daily resistance level now. And then that's where the dollar really broke down. It really broke down, right? So when it really broke down, this is where the trade started to look a bit fishy to me, because I could see it finding some support level right here, like finding some difficulty breaking below here. And as you can see at 10:35, this is where I thought, this is the last sign of some bullishness to me. We might be continuing to rally up on the dollar, which would have made the QQQ quite bearish, right? And as you can see, it was kind of bearish for the interim here. So that's where I exited. I'm thinking the market might be pivoting against me, so I don't want to just be holding this entire trade if the dollar and the QQQ started to go against me, right? And as you can see, it started to rally up. When during this entire rally, that was this move down here on the QQQ, right? And then it seemed to find a top at 11:45. Let me see, 11:45 here. So 11:45 was another bottom here on the QQQ, and it was the top on the dollar. And then it just began to sink after that. That could have been another entry for somebody who wanted to take it to the upside again. So at 11:45, if you had seen this top on the dollar, you probably could have played the QQQ to the upside and take it out at a daily resistance level or close to the daily weekly level. This is something to really take note of, because if you try to hold it to the exact level, there's a chance that it might not go all the way to there. It goes close to the level, but however, it doesn't touch the level. If it doesn't touch the level, you never hit your take profit, and you kind of get disappointed. However, you still would have closed it in profits for sure. But as you can see, at 11:45, it was just a trend down on the dollar, and that trend down on the dollar equated to a trend up on the QQQ. So I mean, a good trading day overall. So QQQ rallied up. I'm guessing the market was reacting more off of the CPI news. So the CPI news kind of lagged today. And as you can see, Bitcoin hit 20,835 as well. So Bitcoin had a good day. If the dollar is going down, you're gonna see Bitcoin rally as well. You're gonna see Tesla rally. You're gonna see equities overall rally. You're probably even gonna see stuff like gold rally. So let's look at gold. So yeah, gold had a good day as well. So I think even looking at the dollar, it could be a good way to offer some signal when you're trading other equities like gold. You trade in the QQQ, you trade in US 30, which is a Dow, you trade in S&P 500, you trade in the Nasdaq, which is QQQ, or the US 100. So overall, it was a good day. That's basically what I wanted to share with you today. Hopefully I was able to provide some value to you, and you can see that the dollar is actually reacting to some of the daily levels as well. And what's our next level here? Our next daily level is at 101.717, right? So if the dollar actually comes all the way down here, this is quite the bullish move on equities and the market. So if we see the dollar start to push down to this level, we're gonna see the QQQ continue to rally up. We're gonna see Bitcoin probably at 22,000, 23,000, just rallying off that move. However, I'm not sure how long this is going to last, because we have the Federal Reserve meeting February 22nd. And if the market is very high, and the Federal Reserve chairman sees that, I'm not sure that he's going to be very happy about that. He's probably going to give a statement saying that just because they are slowing the rate of hiking the interest rates, this is not a reason to think that economic conditions are easing, right? So he might just kind of emphasize that he doesn't want to see equities and all of them rallying as a sign that, yeah, everything can begin to go back up. He wants to see more softness in the economy. He doesn't want to see everybody acting like there's a lot of free money in the system. He wants to see that tightness. He wants to see inflation come down, and equities being quite high is also a factor in inflation. Like, so we have to really pay attention to that and keep that in mind as we go forward trading the market. However, it was a good day overall for most people, because I mean, most people are bullish bias. If you're investing in the market at all, you're going to want the market to go up, right? You're going to want the market to go up because you have money in the market at all, right? So that's basically what happened today. I'll probably see you tomorrow. I'm trying to do a video with like a lot more edits and like a better quality video, so I'm gonna find a way to strategically do that. So hopefully that comes out tomorrow and you enjoy it, and I'll see you tomorrow and then next week for a good consistent week. Bye bye.